This morning, we are looking at Unisem, which just announced lower quarterly earnings on Tuesday. RHB Research says the stock is still a buy, though it lowered its target price to 4 ringgit 62 from 5 ringgit 1 cent. Unisem last closed at 4 ringgit 12. The semiconductor player booked a 20.6% fall in its third quarter net profit to 40.27 million. This was due to lower revenue following plant closures in Ipoh and the headcount cap due to the EMCO. Its 9-month results look solid though. RHB points out that Unisem's core earnings jumped to 142.2 million while revenue stood at 1.1 billion. That's broadly within expectations at 67.6% of RHB's full year forecast and 66.1% of consensus estimates in view of an expected stronger fourth quarter. Looking ahead, the research house says Unisem expects sequentially stronger results as operations return to normalcy this month, now that all its employees are fully vaccinated. It expects sustained strong demand across all of Unisem's products to continue in the next 2 to 3 quarters, given the current chip shortage. Meanwhile, the Phase 3 expansion at Unisem's Chengdu plant is progressing as planned and should be completed by the end of next year. RHB says it made a marginal change in its FY21 to 23 earnings forecast by -3% to 6%. This is to account for the improvement in average selling prices and the impact of the EMCO on its operations. RHB believes Unisem will resume its growth momentum in the coming quarters, tracking overall robust demand and favorable factors seen in the semiconductor sector. Downside risks are lower than expected orders, stronger than expected ringgit to US dollar exchange, and a resurgence of COVID-19 cases. So what's the consensus? According to the latest Bloomberg data, there are 7 buys and 2 holds on the stock. Average target price is 4 ringgit 79 versus the last closing price of 4 ringgit 12. That implies a potential return of about 16%.